Idaho's housing market was the first one to enter a downturn in this housing cycle, with prices declining nearly 9% from the peak of June 2022. You can see that this decline is the biggest in America. So home prices in Idaho have dropped the most. However, the home prices in Idaho are still very expensive, with the typical price registering $442,000. You can see that this price is down from its peak. However, it's still way above where prices were only 3 to 4 years ago. In particular, prices are still more than double what they were in 2017. So if you're a home buyer in Idaho, you still likely are looking around at listings on Zillow, whether you're in Boise or Coeur d'Alene or Idaho Falls, and you're saying to yourself, this still looks like an expensive housing market, especially with mortgage rates being around 7%. There's just very little affordability in Idaho right now, and as a result, I think home prices have a high chance of continuing to decline. That's because home prices in Idaho are 34% overvalued, everyone. Idaho, even with these initial declines, is still the most overvalued housing market in America. Very important you understand that as a buyer investor looking at the market in 2024, because there's going to be a lot of people who try to FOMO you into buying a house in Idaho. They're going to say, oh, the prices are just going to start going up again now that mortgage rates have gone down. But I don't know about that, folks, because when I look at the home value to income ratio in Idaho, I see a 5.9 home value to income ratio, taking the $442,000 home price, dividing it by a $75,000 median income. And we can see this value to income ratio has improved in recent years. It's becoming more affordable, but it's still way above that long-term average value to income ratio of 4.3. And so when you see this value to income ratio above the long-term average, that's a signal that the market's still overvalued, particularly in a metro area like Boise, everyone. Boise, Idaho has a special place in my heart. It was actually one of the first cities I started talking about on YouTube 2 to 3 years ago when I started posting videos, and I would predicted that Boise was in a big housing bubble and that it wouldn't last, and sure enough, if we look at data here on Reventure app by metro area, we can see prices in Boise are down 11% from peak. That's one of the largest drops in home prices in America since the middle of 2022. And if we zoom in further here on Reventure app and look at the different zip codes in Boise, we can see that there's areas that have dropped by as much as nearly 15%. Like in Star, Idaho to the west, prices are down 15% from peak. So we've had some fairly substantial declines here throughout the Boise area over the last year and a half. But what's interesting is that due to these declines in prices in Boise over the last year, we've seen a lot of sellers on the market now go on strike. A lot of the sellers on the Boise housing market, they know that the downturn is here, and as a result, they're refusing to list their homes. The new listings in Boise are way down, with data from Redfin showing that new seller listings are down 20% over the last year and are down by 50% from where they were in 2021. So the sellers in Boise are on strike, which means that the inventory levels of homes for sale have dropped back down to a more normal level, which is creating the impression of a more balanced market, where there's some people now in the Boise market who think a recovery is occurring due to the decline in inventory. As you can see right now in the Boise metro, there's 2,200 homes for sale. This 2,200 homes for sale is down from the 3,600, a record amount last year. Well, now we're back down towards what, the long-term average is. So roughly average amount of inventory is now in the market. Clearly way more homes for sale today than there were in 2022 when there was only 800 homes for sale. So it's not like we're going back to the pandemic in Boise, but the inventory is just more back to normal, while the percentage of sellers cutting the price is also kind of more back to normal, and the days on the market is more back to normal. And so one has to ask, is this more balanced market in Boise this year compared to last mean that home prices won't go down anymore and that we're not going to see a further housing crash in Boise in 2024? Well, I'm going to answer that question for you actually later in this video, everyone. But first, I want to zoom out and take a broader look at what's going on in different metros in Idaho. In particular, I want to look at how much prices have dropped since the peak. We can see in Boise, we talked about they were down 11%. In Idaho Falls, prices are down 8.5%. In Rexburg, they're down 8.6%. If we go up towards Coeur d'Alene, we can see they're only down 2.9%, while in Sandpoint, home prices are down 9%. So we got price drops pretty much everywhere in Idaho, but they vary anywhere from 3 to 11%. But now an interesting question to ask is, where are prices going to drop the most going forward? Like, what metros in Idaho have the greatest likelihood of price drops in 2024? Well, to answer that question, which is something you would want to know as a home buyer and investor, is your city going to experience declining prices next year? We should consult a metric that's available on Reventure app called called inventory versus average. And what this does is it takes a look at today's inventory levels for the month and compares it to the long-term average for the month, with the idea being that areas with more inventory than normal, those are the ones where prices are most likely to drop. And if we scroll in here, we can see actually Idaho Falls jumps off the page. Inventory is up 32% from normal in Idaho Falls. It's up 40% in Blackfoot, 26% in Pocatello. You can see we kind of have this pocket here in southeast Idaho where the inventory, even stretching down into Utah, is up significantly, whereas in Boise now inventory is like down slightly from the long-term average. If we head back up to the northwest, we can see in Moscow, Idaho, inventory is up 33%. In Coeur d'Alene, it's up 12%. So in most areas in Idaho, inventory is still up, especially in the southeast area, which is where I think potentially the biggest price declines are going to come in 2024. However, folks, what's amazing about this data is that there's lots of differences not only across a state, but within a city. If you're a home buyer in Idaho or any other state, it's not enough to know, like, what are the price and inventory trends in my state and metro? You need to know what they are in your neighborhood, because we're starting to see significant differences in different neighborhoods across America. Like, you could be in the same city 5-10 miles away, and in one area there's an inventory shortage and prices are going up, while the other area has a lot of inventory and prices are crashing. And so how are you going to know the difference between the two and make a more educated decision as a home buyer? Well, you have to look at the data for your neighborhood. And for this, we're going to go back to Boise just to show these differences, where you can see inventory versus average. Well, now in Boise, the inventory is down in Meridian compared to the long-term average. It's down further south in Kuna. It's down further west. However, the inventory is still up on the northern end of the city from the long-term averages. So what this means is that areas in blue where the inventory is down may be more likely to have stable prices. Areas in red where the inventory is up, like in Emmett, more likely to have declining prices. And to see this just more visibly, let's pick the zip code down in Meridian, which is, I know, an area that a lot of you are looking at. You can see last year in Meridian, inventory spiked to 366 homes for sale. Now it's down to 223, slightly below the long-term average. So that's a tighter market in 83642, signal that prices will be a bit more stable. Whereas here on the north end of Boise, inventory is still going up, which is signal that there will still be downward pressure on prices. And of course, one of the big factors for Idaho's housing market is external migration and external demand. Because one thing is very, very clear when I look at the data, and you guys can let me know if you're in Idaho watching this video, if you agree with this, is the fact that the locals in Idaho don't have enough money to support this housing market. Because the median household income in the state of Idaho is $75,000. That's below the US average. You can see the median income in Idaho, it's actually less than it is in Georgia. It's the same as Pennsylvania and barely above Wisconsin. Yet the prices in Idaho are way higher than those states. So when we have incomes that are really, let's call it below average here, we got to scroll to the third page before Idaho shows up as far as median household income. We have home prices that are way above average. That means that the market's being supported by external people moving in, likely from states like California and Washington in particular. They've been the ones moving into Idaho over the last 3 years, 4 years, 5 years, buying up the homes and pushing up the prices. Now, the problem with that for a state like Idaho is that we're starting to see a reversion in that migration demand. Like, we're seeing now that the pandemic is over, not as many people move in from California, but we're also seeing more people move back. For instance, Redfin had an article that came out a couple months ago talking about how 1 in 10 home sellers are moving because they're being called back into the office. And in particular, they talked to a Redfin agent in Boise who said that they had sellers who both work at the same company, which told them they have to be in the office 3 days a week or lose their jobs. This was back in Seattle, and so they have 6 months to make the move. They ended up having to sell their house in Boise, and they took a $100,000 loss on their home due to companies like Amazon, Apple, Goldman Sachs, Google, JP Morgan Chase, and Meta requiring that workers go back into the office. And so that's a concerning signal for the stability of Boise's housing market. It suggests that not only is the buyer pool dwindling of people moving in, but in addition, we might just see a continual stream of people having to move back to where they came from because either they get called back to the office or maybe they work for a tech company that had to do a lot of layoffs. And so I wouldn't be surprised if there's just structural weakness in Boise's housing market for the long term, because all of a sudden now it's the local home buyer in Boise Boise who is now having to step up and support the market, and quite simply, they can't. The home value to income ratio is too high. The mortgage payments are too high. If we go on Zillow right now and see what's on the market, let's just take a look and find something that's kind of middle of the pack, folks. This house here, $470,000 in Boise. There was a $20,000 price cut a couple weeks ago. Now, interestingly, we can see that the current value of this house is actually lower than it was back in April 2021. So that's kind of significant, folks. Some of these houses in Boise now are worth less than they were all the way back almost 3 years ago. So, there have been some substantial gains in affordability. However, when you look at the mortgage payment here, you still see it to be $2,800 a month. And that's with the recent drop in interest rates. Right now, I put a 6.7% mortgage rate in here. $2,800 a month, $33,000 a year. For a 4-bed, 3-bath house, it's 2,000 square feet. Now, $2,800 a month. Is that a good payment? Is that a reasonable payment? Well, there's a couple ways to think about this, folks. The first is, how does that payment compare to your income, right? If your annual house payment's $33,000, $34,000, that means that assuming you don't want to spend more than 30% of your income on a house, that would mean that you would have to earn over $110,000 a year as a household to support that type of payment, which looks kind of like pretty close to a standard house in the Boise area. So $110,000, how does that compare to the median income in Boise? Well, if we look here on Reventure app, which by the way, I would encourage you guys, go to www.reventure.app after you watch this video to look at all this data for yourself, as this is available for you guys to look at yourself. We can see the median income in Boise is $84,000, 20% less than the amount you would need to afford a house. So we still have issues here in terms of the incomes. You can see a metric here on Reventure app I developed. It's called the house payment to income ratio is still over 40% in Boise, meaning the typical buyer has spent over 40% of their income to buy a house. That's just not tenable, everyone, especially in this economy where we've had 2+ years of inflation. A lot of people are starting to lose their jobs. I don't think the buyers in Boise are going to be there to support the market in 2024. That's just my speculation, everyone. We're going to have to see what happens. I'm going to do a follow-up to this, maybe 6 months from now. We're going to see how the market in Idaho and Boise look. But folks, we should consider another way to look at this equation. What about buying versus renting? If you were to buy that house in Boise and it would cost you $2,800 a month for your payment, how much would it cost for you to rent the same house? If we go back here on Zillow and switch to rentals, and we zoom in and specifically look for houses that are at least, let's just say 1,800 square feet, you can see that you could rent a similar house, similar size, for $2,200 a month. So we could see there's listings like this, $2,200 a month, and actually they seem to be playing games with the rent. Just a couple months ago it was $2,000 a month. You can kind of get in that neighborhood of $2,200, $2,300, $2,400 a month to rent, which is cheaper than your cost to buy. And so actually, if we zoom in here, folks, you can see there's actually a little community here of rentals. Take a look at this. It looks like a build to rent site here where we have a lot of vacant rentals. It looks like we have about 13. Let's open one of them up. Oh, it looks like this is American Homes for Rent, everyone. This is one of the largest landlords in America. It looks like they must have bought these from a builder. This has been listed for rent since September, almost 3 months, $2,300 a month. American Homes for Rent, they're probably going to need to cut the rent on these to move them. And so, folks, the purpose of this exercise is to say, if you're a buyer in Boise, the incomes are getting stretched by the payments, the rents are cheaper, suggesting that the market will struggle more into the future. But folks, I don't want to be too negative on Idaho either in this video. I think there are a lot of good things going for Idaho's housing market in the long term, talking maybe 10, 15, 20 years. Idaho is a growing state. It seems to have pretty sensible state economic policies, lots of businesses like moving there. There's a budding startup culture. And so I think there are positives to Idaho, particularly with that population growth. As you can see, Idaho actually is the #1 population growth state over the last 5 years. From 2017 to 2022, its population grew by 12.9%, expanded by over 200,000 people. We can see that 12.9% population growth over the last 5 years, by far #1 in America. Like #2 is Utah at 9%, Idaho is 13%. #4 was Texas at 6%. Idaho had double the population growth of Texas. And so clearly this is a strong demographic growth state. Lots of people moving there, even though that migration is definitely slowed, it's still likely positive still. So that's going to be good for the state's housing market in the long run. However, first, we're going to just have to see the prices get a bit cheaper, I think, before demand really jumps back in. So as I said earlier, folks, home prices in Idaho are 34% overvalued compared to their long-term norms. And when I say 34% overvalued, I know some people, they get a little triggered. They say like, oh, how can you say that? How do you know that? Well, I just want to explain it again to you folks. Like when we look at the long-term history of Idaho's housing market, we can see that normally home prices relative to income stayed in a range of like 3.3 to 4.6. Like literally from 2006 to 2019, the home price to income ratio, which is the main measure of affordability, was very tightly knit. And then it was in 2020 where it just started exploding. We're going to need to see this value to income ratio come down. I think that's the only way that buyers will really come back into the market. And to see the value to income ratio come down, we either need to see prices drop or we need to see incomes go up. Or we need to see some combination of those two. If we see, prices go down by 15% and incomes go up by 15%, that combination could return affordability into the market. The trouble is that income growth often takes time. It takes years to start to measure something meaningful. Like on average, people's incomes typically grow by like 4% a year. So you're going to need multiple years of income growth in a place like Idaho, assuming there isn't a bad recession where incomes go down. Assuming incomes keep growing at 4% a year, we're going to need like 3 or 4 years of that income growth to really make people feel wealthy enough to start participating in the housing market again. But of course, as I've mentioned throughout this video, there's big differences that exist across a state and across a city. And if you're a buyer and investor, you got to know what those differences are across your area. In particular, when I look at Idaho, I am seeing that the most overvalued housing market is actually, it's not Boise, which is 32% overvalued. Boise is still pretty overvalued, but it's not as much as an area like Coeur d'Alene, where home prices are 43% overvalued in Coeur d'Alene. Let's take a look at this, everyone. With the home value to income ratio over the long run in Coeur d'Alene measuring 4.9, with today it measuring almost 7, meaning that we have a huge deviation for where things were historically that again occurred starting in the pandemic, and you can see it's slowly improving, but it's going to need to improve by more to bring a significant amount of buyers back into the market. Now, I know what some of you are going to say. You're going to say, oh, Coeur d'Alene, that's not a market that runs off income, since a lot of people buy second homes and vacation homes, and a lot of people are remote workers there. And that is true. Coeur d'Alene and many other vacation areas in America operate a little differently than your standard housing market where, people buy their primary home to live in. However, you got to understand that a city and a metro with lots of second and vacation and part-time homes, that has like big risk exposure in the housing market, because like if people feel poorer, if there's a recession, especially a white collar recession where tech workers get laid off, what's the first thing they're probably going to sell if they need to put some extra money in their bank account to cover their expenses? It's probably going to be their second home. And you can see, sure enough, the inventory in Coeur d'Alene has spiked over the last 4 years, now above average. It's almost quadrupled from its low in 2020. It was this low inventory which caused a huge price spike. We no longer have low inventory in Coeur d'Alene. And what concerns me is that when I go on Reventure app and change the metric here to shadow inventory, I see a lot of shadow inventory in Coeur d'Alene as well as Sandpoint, where anywhere from 11 to 27% of the homes are part-time vacant homes. Part-time or fully vacant. We can see in Sandpoint that's 27%. Over a quarter of the owned houses are not lived in on a full-time basis. And when you see that, you gotta be nervous, because it means very loose hands potentially on the inventory. It means all of a sudden that if I said, there's an economic downturn, a lot of people, would be pretty easy for them to sell in these areas. Whereas if you go to Boise, for instance, only 2% of the homes are in shadow inventory. So this is another way to think of how different some of these housing markets are. In Boise, it's an area where basically people buy their primary homes and they live in them. Up north here in Sandpoint and Coeur d'Alene, this is a second home buyer vacation home destination. And if you're someone who really wants to know more about the Idaho housing market, whether you're a buyer or investor, I would encourage you to do this right now. Go to www.reventure.app right now and access the home value and inventory data for free. This data is for free. For anyone who goes to Reventure app, you can look at the home value and inventory data in every state, metro, county, and zip code in America. So if you're trying to potentially buy a house in Boise and you want to see what the trends are, type in Boise into the search, look at the inventory, open up one of these zip codes and see how it's trending. If the inventory is down 50% year over year, that's a signal that prices are going to be more stable or could go back up. Whereas if the inventory is still increasing, that's a signal that there's more sellers and the prices could go down. Now, and if you're someone who wants even more data and more insight, you could become a premium member on Reventure app, pay $39 a month, where you can get access to all these data points on home value to income ratio, overvaluation rate, property taxes, how much home prices have declined since the middle of 2022, how much they crashed in the last downturn. That's an interesting thing to know, as well as looking at seller price cuts, days on the market, population growth, income growth, how many people have a mortgage. And if you're an investor, you definitely want to check out the cap rate data as well as the shadow inventory information. And the best thing about a premium membership on Reventure app is that you can cancel it or downgrade it at any time to go back to being a free member to access the free data. So go to www.reventure.app and sign up for an account right now.